Okay, look at this indicator. This is RSI. I have MACD here and I have a stochastic. This screenshot I've taken around like 9:35 or 9:40 around when candle was here in the live market, right? I've taken the screenshot. So you can see that RSI is showing you buy signal because it is below 30. It's showing oversold zone, but MACD below the signal line, it is showing you bearish, and stochastic still not showing any signal. RSI is telling you buy, MACD telling you sell, stochastic is neutral. Then what you will do? Will you buy because RSI is telling you buy, or will you short because MACD telling you to short, or you will not take the trade because stochastic is not giving any signal yet. That is what happens when you trade with indicators, because every indicator can give you different of signals and you'll get confused. Look at this same chart. Okay, earlier chart was September 19th. You can see date was September 19th of September. Bank Nifty 5 minutes time frame. This chart is a 5 minutes time frame, and the next chart which you are seeing here, same chart, Bank Nifty, but only time frame is different. Bank Nifty 15 September 19. Okay, Bank Nifty 50 minutes time. Chart is same, only time frame is different, but look at the indicator. RSI was telling you buy signal there, now it is neutral, still not properly below 30. MACD, okay, it is here also giving sell. But if you remember, stochastic was not giving you any signal there, but here stochastic is giving you signal. Now what you will do? Will you go with RSI or MACD? Will you go with RSI on 5 minutes time frame or now 50 minutes? Because 5 minutes it was a buy, 15 minutes still it's not totally given buy signal. Now that is the confusion comes with indicators. Okay, because indicators can give different signals. RSI can tell you buy, MACD can tell you sell, stochastic can be neutral, and you'll get confused, right? Not only that, indicators, every time frame it can give you different indication also. That is another confusion. That is why I am not a big fan of indicators. I trust pivot points. Why I trust pivot points? Because pivots are stagnant on your chart. Pivot points are stagnant on your chart. What I mean by that? Look at this September 19th Bank Nifty. Where is your R2 pivot? R2 pivot is here. Where is R2 pivot? Look at this yellow label, 27,550.95. That is where R2 pivot in Bank Nifty on September 19th. Just remember this number, 27,550.95 R2 pivot. Now let me take you to the same chart on 5 minutes time frame, Bank Nifty. Where is R2 pivot? Look at this, exactly point to point, 27,550.95. That means pivot points are stagnant. Whether you use 1 minute time frame, 3 minutes, 5 minutes, 15 minutes, 1 hour, pivot points will not change. Pivot points will not give you different level because you change time frame, unlike your indicators. Okay, so that is what I just wanted to tell you, that pivot points, CPR, everything are stagnant. It will not change its levels because you change your time frame. But indicators can be different on different time frame. Now comes the question, why it is so pivot points are stagnant, why it is that indicators are not stagnant? The reason is pivot points, as I said earlier, based on previous day price action. The daily pivot, what you are seeing on the chart are a daily pivot. Okay, this R1, R2, R3, or what you are seeing here are daily pivots. So these pivot points are plotted on your chart based on previous day price action. For 19 pivots, it is based on 18 price action. You know that pivot points, I said, based on previous day high, low, close price. So once previous day 330 market closed, so you can see that once 330 market closed previous day, it makes one high, it makes one low, it makes one close. That's it. It can't be changed, right? Once market is closed, that high low close is same. It will not change. That is why pivot points also will not change, because it's based on previous day price action. But indicators not based on previous day, indicators are based on current day price action. That's why indicators follow price. Okay, indicators look at the price and they give the indication. That is why indicators are known to be lagging indicator. Why should we use previous day? Previous day market over, right? 18th, this is September 18th. Once market closed at 3:30, it's over. Why should I bother about previous day? Remember, if you are a day trader, 19th is not a individual day. It's not a individual day for a day traders. It is a extension of previous day. That is what you should know. Extension of previous day. That means 19th is the extension of 18th. That is why you see that on your chart. Market most of the time, previous day where it closed, next day it starts from there. Most of the time, not all the time. Sometimes some news may come in and suddenly market opens here or here. That can happen. But most of the time you'll see that it opens from the near to next day close. That is what next day is the extension of previous day. So if you are a day trader, previous day plays very significant role. That's why PDH, previous day high, previous day low, also one of the important support resistances. So that is what I want to tell you, that is why how I said previous day important, your pivot points also important. That's why I said daily pivots are more powerful. Focus more on daily pivots if you are a day trader. Okay. Having said that, I said that I don't believe in indicators much, but you may ask me, then why do I have this indicator? This is the 20 exponential moving average. And you'll see on my chart, many places I use this moving average. You may ask me, why do I use it if I'm not a fan of indicators? Okay, I've been using moving average for a very long time, and this is something I really like it, even though I know that it's a lagging indicator, because you will have attachment to some indicator, right? I'm attached to moving average. Some people may be attached to RSI. Some people may be MACD. Some people may be super trend. So you may have some favorite indicators. So it is very difficult that suddenly you remove all your indicators and start only price action, pivot point, CPR. It's a little bit difficult. So my advice is, like how I still use moving average, even though I know it's lagging, you can also continue using your indicators, whichever your favorite is. But if you ask me, start using pivot points and CPR along with your indicators, and you can see a edge. And if you ask me, cut. And my suggestion is, along with your favorite indicators, also continue using pivot point, CPR, price action, and you can see a edge in your trading, because that is what works most of the time. Okay, so this is what just I wanted to tell you about the difference between indicators and about the pivot points. Okay, now we are going to discuss more about the CPR. Till now I just gave you the basics. Now let us discuss about some of the secrets of CPR, how you can take help of the CPR in your trading. Remember, there are three types of CPR you will see on your chart. Okay, there are three types of CPR you will see on your chart. First type of CPR is like this. You can see that all three lines, top CPR, central pivot, bottom CPR, all three lines are away from each other, right? All are away from each other. Very wide CPR. So such type of CPR is called wide CPR, when all CPR away from each other. Second type of CPR like this. Where you will see that all three CPR very narrow. Second type of CPR like this, when all three lines, top CPR, central pivot, bottom CPR very narrow. Such type of CPR is called narrow CPR. And there can be third type of CPR like this. What is this? This is neither narrow, neither wide, in between, right? Neither narrow CPR, neither it's wide. So in between, such CPR you can say average size CPR or a moderate CPR. So these are the three types of CPR you will see on your chart. Now, having the CPR can give you edge in your trading. By knowing the CPR width, like whether it's wide or narrow, can give you some edge. What is that edge you'll get by knowing the width of the CPR? There are two clues you will get depending on CPR width. Okay, you will get two clues. First clue for wide CPR, the first clue is wide CPR mean it's very strong support and resistance. Anyway, CPR only I said it's a support and resistance. And the wide CPR mean it's very strong support resistance. Okay. So the wider the CPR, the more its strength, the more it is likely to act as a strong support resistance. Okay. So that is what you should remember. Wider the CPR, the more powerful its strength as a support resistance. That is the first clue, right? That means how it's a advantage for you, how you'll get an edge. For example, you know that market opened here on the day where you know that there is a wide CPR, right? There's a wide CPR. Okay, after that market reversed, you can see that after market reversed and it started coming down. Look at the big bearish candles. Look at the candle size. It looks very bearish, right? It looks highly bearish candles. And what you think? You think that, oh, it looks, market looks bearish. Look at the back-to-back red candle. And you may go and short here, expecting market to go like this. But you can see that immediately next candle only it reversed, right? So that is why if you have a CPR on your chart, and if it is very wide, that means it's a strong support because candlesticks are trading above it. So this is not the place to short. You should never short this red candle when it is inside the white CPR or it is above the white CPR, because white CPR is a strong support. Chances of bouncing becomes very high from the white CPR. So this should never be shorted here. So that is what the advantage, that is what the edge you will get, because you know that this is the support and you should not short. As I said, CPR is a place where you can exit. That is the place where you can think about booking your profit. Suppose you shorted here or you shorted wherever you are shorted here, wherever at the top, and when price comes near the CPR, you should be ready to book your profit in this region. Okay, this is the region where you need to book the profit. Don't expect to market to go down because there is a wide CPR. Here also you can see that wide CPR day, all CPR is very wide, and you can see that market opened with a bearish candle, then immediately it got reversed from here, started going up, right? So if you went long here, you thought market is reversing, you went long here, this is the place to book your profit. This is the place you should exit, because there is a strong resistance, there is a strong CPR resistance here. So that is the place to exit. Suppose you didn't exit, you expected market to go like this, then see what happened. You didn't book your profit here, came down, again went up, and finally market reversed. It came back to the same place where you bought earlier. So that means all your profit gone. You entered long here. Once market came near the CPR, if you knew that you were supposed to take your profit there, then you would have made profit, right? Instead of losing all the profit later on. So that is what the CPR. So CPR, the wider it is, more strong it is. Okay, that is the first thing. I said two advantages or two edge you will get when you know wide CPR. Second one is, whenever you have a wide CPR, whenever your CPR is wide, you should know that it is more likely market is likely to stay sideways. What actually sideways market? You should know that there are two kind of markets. One is trending day. Trending day means what happens? Market opens here at the one end, keeps going up, keeps going up, keeps going up. That is called trending day. Trending day can be both side, not only upside. Market opens here and keeps going down, keeps going down, keeps going down. This is also trending day. Okay, it can be upside or downside. Trending day means market keeps going down, opens at one end, closes at one end. That is the trending day. Sideways day means like this. Market opens, looks like going up, comes down, again goes up, comes down, again goes up, comes down, like this. Okay, this is what known as sideways day. That means there is no direction. For some time it looks like going up, for some time it looks like going down. For example, you can see that it looked like market is going up, came down, again it looked like going up, again came down, again went up. Look at this, market opened with a bearish candle, suddenly started going up, again came down, again went up, and finally closed here. That is what known as range bound day or a sideways day. Okay, like this. So that is what you should know, that wide CPR, when you see a wide CPR, chances are very high that market can stay sideways. For example, wide CPR, chances are very high that market can stay sideways. So that is what wide CPR will tell you. So that is what one of the secret of CPR, that wide CPR will help you to know that market likely to stay sideways. If you are an option trader, if you are a strategist, option strategist, okay, you like using options strategies for non-directional trades. Non-directional trades mean you expect market to stay sideways full day. Entire day you think that market will stay sideways. If you know the option, if you have a option knowledge, you know that there is a strategy called short triangle, right? Short triangle means strategy where you will sell out of the money call option and you will sell out of the money put option, because you are expecting market to stay sideways. That is what they collect the premium here by selling the call option, and they collect the premium here by selling the put option, and they expect market to stay sideways. And if it's an expiry day, you know that all out of the money call and put, almost it becomes zero, and they make profit. Option sellers make profit by selling the call and put on the both side when they expect market to stay sideways. Anyway, this webinar I said, this is not a webinar where I'll be discussing option strategies and all this. Mainly this webinar to tell you how to take directional based trades. This is only for people who know the short triangle strategy. For them, whenever you see wide CPR like this, then there is a very high chances that markets are sideways. So short triangle can be a good option for them. Okay, now I told you about the wide CPR. Second thing I told you about the narrow CPR, right? What is the secret of narrow CPR? What it tells you narrow CPR means? Narrow CPR means, first thing you should know, it's not at all strong support resistance. CPR, it is true, it's a strong support resistance, but also it depends on its width. If it is too narrow like this, you should know that it's not a strong support resistance. Many times I've seen price doesn't respect the CPR at all when it's too narrow. Okay, that means you can see that CPR was respected here, CPR was respected here. If the same time, instead of wide CPR, if this chart what you're seeing here had a narrow CPR like this, then one could have shorted this even without worrying about CPR, because CPR is very narrow. For example, you have seen same chart, but it had a narrow CPR like this, then one doesn't have to worry about going long here, because CPR is very narrow, means it's not a strong support resistance. Okay, because it can easily break and it can go like this. But if it is wide, then only I said it's a strong support resistance. Okay, so that means what? That means narrow CPR mean it's not a powerful support and resistance on your chart whenever it is too narrow. Now you may be thinking that, oh, that means narrow CPR mean it is no value at all. I don't have to worry about the narrow CPR whenever I see on your chart. Remember, narrow CPR also have one important significance. What is that important significance narrow CPR have? You remember I said there are two types of the day, sideways day and trending day. Sideways days normally happens whenever CPR is very wide, right? Then there is something called trending day. What is the trending day? Trending day means market opens at one end of the day, keeps going up, and finally 3:30 market closes at one another end. That is what called trending day. And trending day more commonly you will see whenever CPR is very narrow. Okay, when CPR is very narrow, you are more likely to see trending day. What about the average CPR? Remember, most of the time market have average CPR. Wide CPR, narrow CPR rare, but average CPR more likely most of the time you will see. So what about the average CPR? What is the advantage or what is the edge? What is the clue you will get? To be frank, average CPR will not tell you much of the things, like it is likely trending day, sideways day. But as far as support resistance concerned, average CPR also very strong support resistance. Not only wide, even average also very powerful. Only if it is narrow, then it's not powerful. Okay, these are the three types of CPR and how you can take advantage of it. Now many people ask me that how to know wide CPR mean how many points. Okay, wide CPR mean is there any points, so that if I can tell 100 points in bank nifty, 35 points in nifty, or 33 points in nifty, 95 points in bank nifty, is there anything like that? Exactly, can I say how many points mean it is wide in nifty, how many points narrow in nifty or bank nifty? Is there any points? Let me tell you, there is nothing like that. I can't tell you exactly points, how much mean narrow, how much means wide. It's all about looking at the chart and taking the decision. Look at this slide. Do you need any magnifying glass to know whether it's a narrow or wide? Or do you need any magnifying glass to know it's a wide? No, right? Looking at the chart only you will come to know which is narrow, which is wide. So that is what I said. Narrow, when three lines are close to each other, when it's away from each other mean wide. If it is between narrow and wide, that means it is average CPR. Okay, so that is what, just remember, there is nothing like exact points. One can say narrow means how many points, wide mean how many, average means how many. But remember, narrow CPR mean it's more likely have a trending day, wide CPR more likely sideways day. If you observe, when I'm talking about this, I use the word likely. Narrow CPR mean likely trending day, wide CPR mean likely sideways day. Why I'm using the word likely? Why I don't say exactly 100%? Because what I said, trading is a probability, not a certainty. Trading is not like an exact science. Strategies, patterns, whatever it is, everything is a probability. It's not a certainty. There is nothing like a mathematics. In mathematics, 2 plus 2 is always 4. It never becomes 3 or 5. That is what known as certainty, exact science. But in trading, 2 plus 2 can be sometime can be 5, sometime can be 3, sometime can be 6. Okay, so that is what trading is. So that means trading is not like a exact science. It's all about probability. So that is what here also you can see that most often, but not always. So that means don't think that narrow CPR means it's like a magic. 100% of the time it's a trending day. Wide CPR means it's like a magic that 100% of the time sideways day. Nothing like that. It is probability. Most of the time, yes. Most of the time. Wide CPR means most of the time, yes, but not 100% of the time. In trading, that's why one should always have probability mindset. Mindset should be probability, not a certainty. That is what professional traders also understand, that fact, that it's all about probability. That's why always they keep stop loss. That is why there is something called stop loss in trading, because trading is a probability. If your trade doesn't work as per your analysis, then you should have a stop loss so that you can close your trade accepting that your analysis went wrong, trade didn't work, and take the stop loss and close the trade. Look at this on 8th, you can see that market opened with a big bearish candle, kept on going down, kept on going down. It's had a trending day. Next day, what happened on 9th? It opened with a bearish candle, but after that market stayed sideways. Right? There was no trend. Both days you had a red bearish candle, both days, but one day led to trending day, another day led to sideways day. That is what CPR can give you that edge. So when you see narrow CPR starts with a red candle, if it breaks the previous day low, then chances of trending day becomes higher, but not 100%. So next day what happened? Again you have seen bearish candle, then your bias should not have been towards the trending day, your bias should have been like a sideways day because of the white CPR. Now let me tell you another thing. Many people think that trending day means, oh, look at this. Had they bought put option, maybe 100 rupees, it could have become 100 rupees, could have become 300, 400 rupees because there was a huge trending day, right? Option buyers who bought a put option, he would have made a huge profit on it. But next day, if he had bought put option again here, looking at the red candle, expecting market to go down like this, but what happened? It didn't go down. It started staying sideways. And that person bought out of the money put option. And if it was an expiry day where options out of the money become zero, whatever the premium he paid, it would have become zero, right? Whatever the 100 rupees, 150, 200, whatever the premium he paid, at the end of the day, he must have lost all the money, right? That option would have become almost zero because white CPR mean you should have thought it may be a sideways day. Now another thing, trending day can give you huge profit potential because market keeps going down, and if you bought a put option, you could have made a huge profit. But sideways days, see, it didn't go down, and if you bought out of the money put option, if it was an expiry day, you would have lost. Many people become very big fan of trending day, not sideways day. Many people think that they want to become an expert in trending day so that they can make big profits. Not bad. I'm not saying that you can't become an expert in trending day, but if you ask my opinion, which one is my favorite? I prefer trending day or a sideways day. My answer is I prefer sideways day. You may be surprised to hear that I prefer sideways days more than a trending day. Simple reason that how many days in a month? 30 days in a month. Remove Saturday, Sundays, you may see around 22 trading days in a month because Saturday, Sunday market closed, right? So out of 22 trading days in a month, you will see trending days only 4 to 5 times. So that means this kind of the day, only 4 to 5 times. Remaining 17 to 18 days, market stays sideways. Okay. So that means most of the time, market stays sideways. That is why I said I am a fan of sideways days, because being a day trader, I need to trade, if not every day, at least you need to have opportunity, right? So if you are a day trader, then you should know that if you are trading, especially Nifty and Bank Nifty, I am giving the example of indices, that is Nifty or Bank Nifty. Okay, yes, swing trading, positional trading, I trade in stocks, but day trading mostly I prefer indices, that is Nifty, Bank Nifty. So that means Nifty, Bank Nifty, most of the time it stays sideways and very rarely it goes in trending day. So that means you should be expert in sideways days also. You should know how to trade sideways days. Okay, so that is what very important. You should also know how to trade on sideways days, not only on trending day. This is the trending day and previous day was a sideways days, and you may think that sideways days, how to make money, it is staying sideways like this. Remember, there is something called initial balance in trading for day trading. Okay, initial balance means first 1 hour of the day. First 1 hour of the day. What is the first 1 hour? On sideways days, market trades between the range. It makes two range, and most of the time market stays between that range. Okay, what is that range? That is what I said, initial balance. That is the first 1 hour. First 1 hour of the day. So you can mark first 1 hour high and low. For example, 9:15 market open, 10:15 market here. Then this is your first 1 hour high, first 1 hour low. Most of the time you'll see market trading between two ranges. Okay, so that means entering either of the range can give you good trades. Okay, look at this, market opened with a bearish candle, then started going up, coming down, went up, coming down. Okay, this is the first 1 hour low, and you can see this is the first 1 hour high. So this is what market likely to stay between those ranges, and we'll discuss more on that in the second session, where we'll discuss about the patterns and strategies. And you'll see that I have also patterns and strategies on how to trade on sideways trades. Okay, now we'll discuss about the virgin CPR in this slide. We discussed about the narrow CPR, we discussed about the wide CPR, right? Now let us discuss about something called virgin CPR. What actually virgin CPR? Virgin CPR mean on any given day there is no candlestick inside that CPR, then it is known as virgin CPR. You can see there are no candlestick inside, so this is your virgin CPR for the next coming days, not for the current day. For the next coming day it becomes virgin CPR. Why next coming days? Why not for the same day? Because look at this, 3:30 anyway market, you can see that no candles entered inside the CPR. But in the live market, when market is live, before market close, anything can happen. It may be till 3:15, 3:20, it was a virgin CPR, but suddenly one candle can come and last candle of the day can break it. So this is no more a virgin CPR, because entire day till 3:15 it was a virgin CPR. Finally it broken it. So it's not a virgin CPR. That's why wait till 3:30. Once market is closed, then look at your CPR. If there are no candlestick means next day it becomes virgin CPR. What I do? I go and mark a box like this, and that box is my virgin CPR. Okay, that box is my virgin CPR, and virgin CPR also nothing but your support and resistance. Like current day CPR, virgin CPR also your important support and resistance. So I look for the candlestick pattern near that virgin CPR. If I see that bearish candle, near the virgin CPR, so that means it is resistance. So that means there is a selling pressure. So chances of market going down higher. So if I see bearish candle, I can short, keep my stop loss above that virgin CPR. Okay, we'll discuss more about the virgin CPR when we go to the second session, where we have a strategy for virgin CPR. But couple of things you should remember. Virgin CPR stronger when it is new, it becomes weaker and weaker as it becomes older and older. What I mean by that, let me just brief it. For example, you can see that there was a virgin CPR here. Okay, there was a virgin CPR here because that day market stayed below that CPR, so that becomes virgin CPR. So next day you mark this, right, because that is your another support resistance. Assume that next day also market stayed. This is the day 1, next day is day 2. Day 2 also market didn't enter that virgin CPR. Again you will mark it for day 3. Day 3 also market stayed below this. Then next comes day 4. Day 4 also market stayed. Next is day 5. And then market kept on going down. You mark it here. Then next day also it is still valid, because you can see that there are no candlestick inside that virgin CPR. This is the day 6 and market is going like this. Now how many days you will keep marking it? Day 1, day 2, day 3, day 4, day 5, day 6. Will you keep marking it forever? No. Will you keep marking it forever that it is still valid? No. That is what I said. Up to 5 to 6 days only I mark it. If price did not enter inside that virgin CPR even after 5 to 6 days, 7th day onwards, I don't mark it. I leave it. I don't mark it again, because virgin CPR is very strong when it is new. Within 5 to 6 days, after that, it becomes weaker and weaker. That is what I mentioned in the slide. Okay, I'll show you with the chart again in the later slide, but just remember this. Virgin CPR is stronger when it's new, becomes weaker and weaker as it becomes older and older. Virgin CPR generally works best at opening session compared to late afternoon session. Let me explain this also again, what actually I mean by that. Look at this, previous day was a Virgin CPR, right? And I mark this box, okay? I mark this box as a support resistance. Forget about this candlestick, forget about this price action for a moment. Assume that on 4th, market opened here, okay? Market opened like this. Then finally around 2:30, market went near that Virgin CPR and then made a bearish candle. Will I short here this red candle because now it came near the resistance? Will I short? I will not be interested to short. I will not be interested to short because it's a late afternoon. Breakouts are very common in late afternoon. Many times I've seen it easily breaks the Virgin CPR. It will not respect Virgin CPR. Instead of reversing, it keeps going up, breaking the Virgin CPR. That is what I mentioned here. Virgin CPR generally works best at opening session compared to late afternoon session. Okay. For example, look at this first candle at the opening session only, it's showing bearishness. That means it's a high probability. I will go and short this bearish candle and I'll keep my stop loss above the Virgin CPR, expecting market to go down. Okay, now you may be thinking that what is the opening session, late afternoon session? According to me, opening session, I say first 1 hour. I consider first 1 hour as a opening session, 9:15 to 10:15. Then 10:15 till 1:30, I consider as a mid-afternoon session. 1:30 to 3:30, I consider as a late afternoon session. That is what I consider it. Okay, so there is no rule that everyone has to consider exactly like that. Some people say opening session is first 30 minutes. So there is nothing right or wrong. It's totally up to you. But I consider first 1 hour as a opening session. So that is what first 1 hour I give importance to Virgin CPR, not after that. Okay, and look at this, how narrow it is, where you will not see even entire 3 lines properly. If there are both all top CPR, bottom CPR, central pivot at the same point, then you may not even see exactly like a CPR. Here you can see CPR, all 3 lines, but look at this. It looks like a single line, right? This is also CPR. It can be narrow like this, and you can see that price is not respecting at all. But trend, you can see that it was a huge trending day and it was a narrow CPR. Okay, now coming back to this slide, how to know your CPR? For example, CPR pivot points, I said it is based on previous day, right? Daily pivots and daily CPR, previous day price action. That means next day CPR pivot point, you will come to know next day pivot point CPR the moment market closed. For example, Monday 3:30 market closed. Next day, where is your CPR? Where is pivot points? You can see 1 day before only. Even though Tuesday market opens at 9:15, but Monday after 3:30 also you can see where is your Tuesday that instrument going to have its CPR or pivot points. That means you can see CPR pivot points well in advance before market opens. How to know that? For that, there are 3 ways. There are 3 ways to know where is your CPR. One is you need to have TradingView account. TradingView is the charting platform where you can get the CPR. If you want to know from where to get this CPR, because many platforms don't have CPR on their chart, but TradingView is the one platform where you can get the CPR. If you want to know how to get this CPR, just like how I'm having it on chart, what you can do after watching this course, then you can send me an email and you can ask me for video on how to set up CPR in TradingView chart. I have a small video which I can share it with you, and you can watch that video and you can plot same kind of CPR where you can see on this chart. Just like my CPR, you can also plot it on your chart. But for that, you have to send me a separate email requesting for video on setting up CPR in TradingView. Okay, otherwise there are so many CPR available in TradingView, and I assume that all of are same and you can use anything. But if you want to use same CPR which I am using, then you can send me an email. Okay, that is the one thing. You can have a TradingView account and you can open and you can find a CPR there. Okay, and you can see that all my charts in this course are from TradingView. I use TradingView platform. You can see that it is from TradingView. All the charts which are seeing in this course are from TradingView. Second thing, you can calculate CPR with the formula. Suppose you don't have TradingView account. Okay, you don't have a TradingView account with you. Still you want to use CPR. Is it possible? Yes. CPR can be manually plotted also. For that there is a formula. Okay, you can manually calculate that on an Excel sheet, and you can manually also plot lines like this. You can plot CPR lines manually if you don't have TradingView software. And third thing, you can also just take a guess. You may not be knowing exact level where CPR is, but you can take a guess whether it's a wide or it's a narrow. Okay, you can take that guess whether it's a wide or it's a narrow CPR going to be. How? For that, I said pivot point CPR based on previous day price action. If previous day, for example, Monday, assume that market had a big trending day, okay, huge trending day like this, you are likely to see wide CPR on your chart. So trending day leads to wide CPR. Suppose someday market was like this, very sideways, and 9:15 opened here, 3:30 market closed here. Next day you are likely to see narrow CPR if market is range bound. Look at this trending day, right? Next day what happened? Wide CPR. And wide CPR day it had a sideways days. Next day it was kind of narrow CPR. Here also you can see that it was a sideways days. Next day what happened? It had a narrow CPR. Okay, so that is also, you can take a guess based on previous day price action. Coming back to Virgin CPR, this is also Virgin CPR. You can see that no candlestick inside its CPR for the entire day, right? This is also your Virgin CPR because no candlestick. But if you ask me, this is more powerful Virgin CPR, not this. Why? Because this is wide Virgin CPR, right? Very wide. So as I said, wide CPR is very powerful. Virgin CPR also, if it is wide, very powerful. Narrow CPR not powerful as a support resistance, and even narrow Virgin CPR also not a powerful support resistance. Look at this, it was a Virgin CPR. Next day what I'll do, I will go and mark that level. I mark that level next day. Look at this. 10th, what happened? Day opened with a bullish candle, giving you impression that it is going to go up like this, but what happened? It's still stuck. You can see that it's not able to go up. It is still stuck. Why? Because there is a Virgin CPR. Okay, there is a strong wide Virgin CPR. So this is entire level is strong resistance. If you knew that concept, then you would not go long here because you know that there is a strong resistance. But if you don't know about the CPR, if you don't know about the Virgin CPR, you may take a long trade here expecting market to go up, and you are thinking why market is not going up, why it is staying sideways, because there is a wide Virgin CPR resistance. This is not a Virgin CPR. Okay, you can see that so many candlestick inside. You can see that so many candlestick inside. So this is not a Virgin CPR. There are candlestick, not a Virgin CPR. Sometimes you may see only wicks. Sometimes you may see only wicks inside like this. No candlestick but wicks. If you ask me, still can consider it as a Virgin CPR? Yes. Still you can consider as a Virgin CPR, and I call it as a partial Virgin CPR if there are only wicks inside it. Okay, I consider as a partial Virgin CPR, but as long as support resistance concerned, still partial Virgin CPR also very strong support and resistance. So with that, now we are coming to the formula. I told you that pivot points are calculated based on the formula of previous day high, low, close, and this is the formula. This is the formula for central pivot for R1, S1, R2, S2, R3, S3 pivots. But previous high means what? Previous day high or previous week high? That depends on which pivot. Suppose you want to calculate daily pivot, then it should be previous day high, previous day low, previous day close. If you are plotting weekly pivot, then it should be previous week high, previous week low, previous week close. If it's a monthly pivot, yearly pivot, same thing. And then you have to divide it by 3 to get the central pivot. And for R1, S1, R2, S2, this is the formula. But as you know that pivot points are available in almost all the platform. I think almost all the platform charting software, they will give the pivot points. So you don't have to manually calculate it. It is just like spending additional time for doing something which already there on the platform. So I don't recommend you to do this calculation every day because it's already available on the charting platform. But only for people who are interested to know how to calculate pivot points, this is the formula. But CPR, I said it's not available in all platform. Okay, TradingView, it is available currently, and TradingView gives you that CPR. Suppose you don't have TradingView platform, then what to do? For them, I said there is a formula. So this is the formula for calculating CPR. Okay, so this is something you can even write it down, put it in the Excel sheet, and every day you can calculate it and you can manually plot it. So because CPR is not available in all platforms, so this is something maybe useful for you, this formula. Sometimes you may see that this is the central pivot, and when you calculate bottom CPR coming here and top CPR coming here, you will get confused. How bottom CPR coming here, it should come bottom, top CPR coming here, it should go on top. Remember, CPR based on previous day price action. So the line, whichever comes above the central pivot, call it as a top CPR. Whichever lines comes below it, call it as a bottom CPR. So don't get worried that central pivot is here, top CPR is coming here, top CPR coming here, bottom CPR coming here. Okay, that can happen sometime because it is based on previous day price action. Whichever comes on the top, that considered as a top CPR. If you want to learn more about the pivots and CPR, I can recommend 2 books. One is Secrets of Pivot Boss, which I already recommended earlier. I shown you that books. And there is another book called Logical Trader. This is also a good book. This book is written by American trader called Mark Fisher. Okay, so these are the 2 good books. In this book, The Logical Trader, there are many other concepts also there. It's not only CPR, but in this book, Logical Trader, one specially he has given one chapter to discuss about the CPR. Okay, he has discussed about CPR exclusively in one of the chapter in this book. And Secrets of Pivot Boss also I said, in that book also you can see some chapter based on pivot points and CPR. Okay, that ends the basics of pivot point CPR, secrets of pivot point CPR. So we discussed pivot points and CPR now. Now we'll discuss about the price action next. Why I discuss basics now? Because I said if you want to learn strategies, if you want to learn patterns, first you need to be strong in basics. So that is the objective of discussing all the basics of pivot point, CPR, everything here, so that when you go to the strategies, it will be easier for you to understand. That's why I discussed basics first. Okay, so next is price action. Okay, as we finished pivot point, CPR, now we are coming to the price action. Since this course is mainly based on pivot point, CPR, price action. So pivot point, CPR, we discussed basics. Now we'll discuss basics of price action, important locations, how to know support resistances, how to mark support resistances, important candlesticks, how to mark your charts before market opens, and marking the important levels. That all will be discussed in this part about the introduction of price action. What is price action in trading? Now let us first discuss what is price action. Price action is a method where trader takes a decision based on candle by candle movement, not based on any lagging indicator like RSI, Bollinger Bands, MACD, stochastic, all this. Okay, that means price action trader purely trades based on the price action. He will trade based on what price is telling him, not based on RSI, MACD, all these indicators. If you happen to see any price action traders chart, you will see just price on that. Okay, you will see price and you will see support, resistance, like that. You will see only horizontal lines. You may not see any indicators except couple of moving average or something like that, but you don't see too many indicators because he trades based on price action. Okay, he will trade based on support and resistance, all this. So he'll try to read the price, not based on indicator. That is what price action is. They say price action and patterns keep repeating because it is created by human beings and we all are creatures of habits, emotion. So patterns also repeats again and again and again. See, if market is going up like this, it's going in a strong bullish mode. That means what it is actually, why it is going up? Just give a thought. The reason it is going up because buyers are very strong. There are aggressive buyers. Okay, buyers are stronger. That means they are more than sellers. That means market is going up. If you see market is coming down like this, it happens because sellers are stronger. That's why they are able to take market down. Okay, it's not because of your indicator that market goes up or down. Market will not go up because super trend change its colors or MACD gave buy signal or a sell signal. Market will not go up down because of indicator. It goes up down because of the buyers and sellers. And who are these buyers and sellers? They are human beings. Like buyers and sellers are the traders and all are human beings. We all are human beings, right? And as a human being, we all are creatures of habits and emotion. Our emotions like fear, greed, hope, all these emotions are repeatable one, right? And all human beings have this emotion. So that is what you see on your chart. On your chart, what you see is the human emotion, greed and fear and hope. As you know that human beings, greed and fear, hope keep repeating. That is why patterns also keep repeating again and again and again. That is what price action is. It's all about human emotion, human psychology. That is what, if you learn how to read charts, how to analyze charts based on price action, you have an edge. And that is the objective of this course, to show you how to analyze charts. Okay, where to enter, where to exit, everything will be discussed in detail when we go to the second session. Okay, now let us come to the candlestick. How you can analyze the chart? You can analyze the chart with the help of candlesticks and normal candlestick. Okay, this is a conventional traditional candlestick. I'm not discussing about the Heikin Ashi and all this. I use conventional traditional candlesticks are the one of the best way to analyze price on charts. Candlestick will tell you dominance of buyers and sellers. Okay, candlestick will tell you whether buyers are strong or sellers are strong. There are two important components in candlesticks, that is body and wicks. Okay, these are the two important components. Last one, you can see that I marked it bold. Why? Because this is what very important in trading. Many people think that it's all about candlestick. They think that green candlestick means they have to buy, red candlestick means they have to short. Remember, yes, green means it is bullish, red means it is bearish, but candlestick alone is not important. Suppose you see that suddenly one big bullish candle you see on your chart, doesn't mean that now you should buy this candlestick and market will go up. Nothing like that. Green doesn't mean you have to buy. Okay, it's green mean bullish, right, but doesn't mean you have to buy it. Suppose you see a red candle on your chart, big red candle, doesn't mean you have to short. Yes, it's a bearish candle, but doesn't mean you have to short like this. For that, what is important in trading? Location. This is something always remember when you are taking a trade. Location is most important in trading, not just a candlestick. Just like a real estate, if you know real estate, property price depends in real estate on the based on location. If you have a property at the prime location, you know that that property can give you very good market value. But if you have a property which location is not good, then you know that property prices will not give same value compared to what property in the prime location, right? In real estate, how they say prime location. In trading also, this is what important. Location is most important in trading. If you see bullish candle at the right location, yes, then you can buy. If you see bearish candle at the right location, yes, you can short. But if you see bullish candle at some random place, it is not a buy. If you see a bearish candle at the random place, it's not a sell. So that means you should know the location on your chart. What is that location? That all we are going to discuss in coming slides. Before we discuss about the location, let us discuss about the candlestick. If you want to learn candlesticks, and if you buy a book on candlesticks, you know that there are so many candlestick patterns, right? It is difficult to remember all candlestick patterns because of so many names, and people get confused. Many people think that trading is all about just remembering the bullish and bearish candlestick and trading based on that. Let me tell you, that is not true. You don't have to read entire book on the candlestick trying to remember so many candlestick patterns. What I said, most important is the location in trading. Bullish candle or a bearish candle at the right location only important. So that means you should look for the candlestick at the right location, see whether it's bullish or bearish, then only take the trade. You don't have to just remember so many candlestick names. Now let us start with some important candlestick which I look for. One of the important candlestick I look for is this kind of candlestick. Full body green or red. This kind of candlestick are called Maribozu candle. Maribozu means candlestick which doesn't have wicks. So this kind of candlesticks are one of the very powerful candlestick which doesn't have any wicks. Wicks mean like this. You can see small stick here, right? This candlestick will not have 100% body. So that is the most important powerful. Also, this also very bullish, bearish, not 100% Maribozu, but you can see that almost 90% body. It may have a small wicks on both side or either side, but this is also very powerful bullish and bearish candle. So this both are kind of Maribozu candles, but this will not have any wicks. This will have small wicks. But I said location is more important. If you see this kind of candlestick near some breakouts, if breakout happens with this kind of candlestick, most of the time it's a real. Okay, most of the time it can be real, but sometime it can fail. As I said, nothing is 100%, but breakout happens with Maribozu kind of candlestick. If breakout happens with this kind of bullish or bearish candlestick, most of the time it's real. Next type of candlestick called pin bar. Pin bar also one of the very powerful candlestick. When you see this kind of candlestick known as bullish candlestick, when you see this kind of candlestick known as bearish candlestick. Bullish candlestick will have huge wicks on the downside. That is why it's a bullish candlestick, not just because of the body. Bearish pin bar is not bearish because of the body, but because of the huge wicks. If wicks on the downside, that means it's bullish. Wicks, huge wicks on the upside mean it's a bearish. Candlestick can be sometime, for example, sometime candlestick can be even body can be red. Okay, even sometime it can be red. Most important is the wicks, not just a body. Okay, this is called pin bar. Again, this kind of candlestick pin bar is important only at the right location, that is support resistance. Suppose if there is very important support here and you see a bullish pin bar, that means it's likely a buy signal. Pin bar, bullish pin bar near the support. Suppose if you see some resistance then makes a bearish candle, that means it is likely sell signal because near the resistance. And this is another candlestick I look for. This kind of candlestick called doji. Doji means indecision. Okay, doji normally will have exact size, almost similar size, wicks on the both side, and body will be very small body, or it may not have just any body, any color, neither green or red, just one single line, or it may have a small green, small red. But important is the wicks, equal size wicks, almost equal size wicks it will have. If you see that kind of candlestick at some important location, you see that there is an important location, but candlestick is doji. That means what you should do? You should buy or sell. Whether you should buy or sell? No. You should neither buy or sell if it's a doji. Doji means you have to wait for the next candlestick. After the doji is the candlestick, after the doji is important. If there is a bullish candle after the doji, that means it is likely buy signal. You can buy here because after the battle between buyers and sellers, doji means battle between buyers and sellers and they are equal winners. Okay, that is what doji. So after the doji, if you see a big green candle, most of the time it's a buy signal. If you see after a doji, if you see a big red candle, that means sellers on the battle, you can go with sellers. So that means doji is not a buy or sell. Candlestick after doji is important. And again, I said what is important? The location. So this candlestick are important, no doubt, but candlestick at the right location is important. So remember this, you don't have to remember so many candlestick pattern names, only remember that bullish or bearish candlestick at the right location.